How to invest your first $1,000 step by step. $1,000 may not seem like much at first glance, but when we think about what we can do with that amount of money, it starts to become clear how amazing it can be for your life in the long run. Even investing just $1,000 can make a huge difference to your financial future and allow you to live comfortably. When it comes to investing, there are numerous options. Some people prefer the stock market, whereas others might be drawn to real estate or cryptocurrencies. Some investors like to hold stocks, while others like to purchase bonds or mutual funds. One of the best ways to get started is to select the few types of investments that are right for you and your goals. You've decided to start investing. Now what's next? Here are several assets to help you get started. Before we go ahead, please subscribe to Financial Freedom and hit the like button if you enjoyed the video. Let's get started. What to consider before investing? $1,000. Before we dive into some ways to invest $1,000, here are some factors new investors should consider. Risk tolerance. A risk taker is someone who loves to do risky investments, while a risk-averse person is more cautious when making their investments. Knowing your risk tolerance can help you decide what investment opportunities are right for you. Time frame. You're probably wondering why you should look into your investment portfolio. Taking a look at a longer-term view of your investments is a good idea, since it can help you to see how much you have built up and where you stand when investing. Investing goals. Today, the full spectrum of investment opportunities is on display. There are no guarantees when it comes to investing, but with a wide variety of choices, almost any person can make informed financial decisions and build wealth over time. Pay off your debt first. Forget about saving for a house, car, or even retirement. If you want to see a positive difference in your life, make sure you're not carrying any debt. We recommend that you eliminate all outstanding credit card balances and high-interest loans, such as student or personal loans, before you do anything else with your first $1,000. Some credit card fees are so high that they could take money away from you faster than your investment brings it in. These fees come in many forms, ranging from fraud protection to purchase interest from cash advances. It's important to learn how these cards work, so you can make an informed decision about whether or not it's worth investing in one. Invest in self-education. Knowledge is power, and the more you know about a given field of interest, the better off you'll be when it comes to investing. Learning a little bit every day is the best way to grow as an investor. By consistently tracking your investments and looking for ways to optimize them based on what you're learning each day, you'll be able to make steady progress towards your goals without getting overwhelmed by all the information out there. Consider index ETFs. The investment world is constantly changing. As new products are released, others fall out of favor. One such trend is the growing popularity of ETFs, or exchange-traded funds, which have been recommended by none other than Warren Buffett himself as a great investment vehicle for beginners. An ETF is essentially an index fund that is bought and sold on a stock exchange, just like a stock would be. It offers all of the benefits of an index fund, low expenses ratio and high return, but with even more flexibility because you can buy or sell it at any time during the day like you would with any other stock. If you're looking for something that will give you consistent returns without having to do too much work, then this might be exactly what you're looking for. Fractional shares portfolio. A fractional share stock slice is when you own less than one whole share of a company. Fractional shares allow you to invest in stocks based on a dollar amount, so you may end up with a fraction of a share, a whole share, or more than one share. A great way to start investing in a stock market is by purchasing a fractional share. These are great for people who do not have much money, but still want to be involved in the market and have some skin in the game. They're also great because they allow investors to spread out their risk across multiple companies rather than putting all their eggs into one basket. If you got the cash, investing in fractional shares, where you pay for less than a full share of stock, is any other way to invest $1,000 and start making money quickly. This strategy is also known as dollar cost averaging, because rather than having one large sum of money that you need to decide where to invest, you're putting your money into fractional shares. As a beginner, not putting all your eggs into one basket is a smart move, since your limited knowledge of individual stocks will not likely give you the best return. As with any investment, there are risks involved with investing in stocks, so make sure to do your research before deciding which companies you want to invest in. Robo-advisor services. A robo-advisor is an investment service that automates many of the tasks associated with managing your portfolio. It's designed to be easy and affordable so that anyone can use it regardless of their level of financial knowledge or experience with investing. The biggest advantage of using a robo-advisor is that you don't have to pay high fees for personalized advice from a human being. Instead, you get all the same benefits at a much lower price point. Discover opportunities in alternative strategies. There are a lot of reasons why alternative investments might be right for you. Here are 3 things they can offer. They help reduce your risk by providing diversification across different asset classes. They often generate higher returns than traditional investments like stocks and bonds. They provide additional income in the form of dividends or interest payments. This helps you reach your financial goals sooner. Alternative investments are becoming more popular among investors. If you're looking to diversify your portfolio or boost your income, consider investing in alternative assets like real estate, private equity, art, or other options. These investments often have higher returns than traditional ones like stocks and bonds, which means they can help you reach your financial goals faster. Invest in real estate, REITs. One of the favorite strategies for investing money right now is in real estate investment trust or REITs. What are these, you may ask? These are companies that owns massive amounts of real estate and properties all over the world, from houses to apartment complexes, warehouses, and data centers of medical buildings. Real estate conglomerates are booming right now as life returns to normalcy. We know times are tough, and it can be hard to find an extra couple $100 laying around every month. But if you invest in REIT through fundraise, then you can start with just $500 and make monthly contributions over time until you reach your desired amount. Plus, they have great charts that show how much your investments would be worth over time, depending on how much you invest each month. This is such an easy way to start investing without having to worry about whether or not the market will grow up or down, because these companies are guaranteed by the government. So even during recession, when businesses typically struggle, these companies keep making money because people need places to live no matter what's happening with the economy. Thank you for watching. I hope this video has provided some helpful ideas on how to invest your first $1,000. If you enjoyed the video, then hit the like button and consider subscribing to Financial Freedom. And if you have any questions or suggestions, leave it in the comment section. See you in the next video.